Listed infrastructure lagged broad equities in 2023, setting the stage in our view for a potential turnaround in performance, one perhaps reminiscent of the 2003 to 2007 bull run for the asset class. We have some discounted valuations to discuss today, some earnings resiliency, some aspects related to potential active management offerings considering market leadership over the course of 2023. If I can be helpful for you as a resource in listed infrastructure, or if a call with our broader CBREM team is helpful, please do let us know. Otherwise, just kind of getting into the materials here, setting the backdrop of performance in 2023. 2023 was a year in which listed infrastructure generated a low single-digit return. Here we're representing it by the FTSE Global Core Infrastructure 50/50 Index. You could see how that's stacked up relative to a very strong year of broad equities, particularly influenced by some very concentrated market leadership within broad equities. It follows a year in 2022 where listed infrastructure handsomely outperformed broad equities. We see the lag in 2023 as an opportunity for listed infrastructure to have not only a catch-up trade, but also to reassert its long-term performance leadership relative to broad equities. And so over the course of time, what listed infrastructure has done is demonstrate that leadership. It's done that with also about 100 to 150 basis points worth of lower volatility, providing a smoother return for investors on a historical basis over time. Moving onwards here, potential catalysts for listed infrastructure outperformance. One of the most important things that we think about is the prospects for a Fed pause. And we've gotten a lot of questions on this. Obviously, it's very topical at this point in time for the market. And we do think, quite naturally, that we are at the end of that global central bank hiking cycle. The debate is more turning towards the degree of cuts in 2024 and what those might represent. If anything, we don't think we need to see extensive cuts to engender listed infrastructure outperformance. We just need to have that recognition, which has occurred in the fourth quarter of 23 in our view, that we are at a pause level. And so if you're thinking about global equities as a potential beneficiary of Fed cuts in the year ahead, or if you're thinking about global bonds as a potential beneficiary, we would argue that listed infrastructure certainly has a place to play in that conversation, given the degree of the performance that it's historically generated following the end of a central bank hiking cycle. That opportunity for performance is likely aided today by the discounted valuation setup that listed infrastructure has. And so just by virtue of the fact of the lag that experienced in 23, the resilient earnings, conversely, thinking about it relative to global equities, you can see how discounted infrastructure multiples are today on a relative basis to broad equities. Historically, a 10% premium, the asset class at close to a 10% discount today, actually an 11% discount as of the end of 12/31. During times of uncertainty, important note to file, infrastructure valuations have potentially exceeded north of 30%. Again, this is an asset class that should be prized in our view for its earning resiliency, for the regulated and contracted cash flows that govern infrastructure companies. So discounted valuations here and asset class on sale. Getting into some of the sector and regional color and using the FTSE Net Tax Index as an example here. So it was a very strong double-digit rally in the course of the fourth quarter with the recognition of that Fed pause. That lifted infrastructure into positive territory for the year. The largest region, North America, remained in the red. It was weighed upon by utilities in that region, which had demonstrated a knee-jerk sensitivity to a rapid rise in 10-year yields. At this point in time, we still believe that the underlying earnings resiliency of utilities, both on the regulated side and the integrated side, where they may have renewable development arms, remains unappreciated. And one of the things that we shared in our 2024 outlook is the degree to which global utilities can outperform in an era of potentially higher for longer rates compared to the very recent historical period. A very important note, I think, and this was something that we flagged on our third quarter call, is the performance of U.S. cell towers in Q4. They staged about a 30% total return. They would have been laggards for most of the year. We still see discounted relative valuations to broad equities, to their own historic averages, as well as to the private market. And we expect an improvement in fundamentals for global cell towers as we get through the next year and a half. We think we're well positioned there. In other regions, Asia demonstrated a high single-digit total return, aided by global toll roads, aided in particular by some Japanese utilities, which saw notable strength over the course of the year. The standout region in terms of performance was continental Europe, continuing its recovery from the depths of the invasion of Ukraine by Russia and the ensuing energy and political crisis across Europe, much of which has been more mitigated at this point in time. And then lastly, wrapping up a little bit on EM, we're coming here to a 3-year period in which EM has been an atypical outperformer compared to listed infrastructure. This year it was led by the Latin American airports on the back of some very strong traffic reports. In the long term, emerging market infrastructure more broadly has been an underperformer. It's been an underperformer in our view because companies there have less history of a sanctified regulatory compact, less history of high quality governance, and more volatility in underlying cash flows over time. So an important note to consider when you think about active managers and how they might be positioned across listed infrastructure regions. And then just kind of wrapping up here, I mentioned right at the outset, it was a year of concentration. It was a concentration year for broad equities with the tech sector. It was a concentration year within infrastructure offerings as well, both from a benchmark perspective as well as from an active offerings perspective. More concentrated and narrow offerings outperformed. There were a couple of reasons, taking just the S&P Global Infrastructure Index as an example, why those narrow offerings outperformed. The S&P has an outsized weight, in our view, to the midstream energy sector, which combined across C Corps and MLPs were a handsome performer for the year. The EM exposure benefited. The lack of exposure to communication stocks, which have historically been incredibly resilient and offered very strong returns, benefited. And so when we think about things looking ahead, we believe that more diversified listed infrastructure offerings have the potential to outperform. Again, just as background, what we've done for north of a decade plus here in listed infrastructure is manage against our own proprietary listed infrastructure universe, broader than any individual benchmark, providing high concentration and high conviction bets against that universe, but having representation to all infrastructure sectors, throughout the course of time. And so we think those offerings have the potential to increase their returns in the years ahead relative to other offerings, just as they've done over the longer term period. So that kind of wraps up our conversation today. Again, a very nice opportunity here with listed infrastructure, a catch-up trade, an opportunity to reassert long-term dominance for a strategic allocation in the asset class. We've considered some relative valuation statistics here, discounted relative to broad equities, the potential for outperformance in the wake of a Fed pause, as well as some more detailed considerations concerning active infrastructure offerings and breadth compared to more narrow leadership. So again, any questions on listed infrastructure or real assets, please let me know. Good luck with all of your endeavors in 2024 in this wonderful new year. And if we can be helpful, please let us know. Thank you.